It's the weekly 30-30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the companies that have had the best improvement in the last week. Gary Glowett has been through both lists to find the best trading opportunities, which charts we can learn something from, and put out some insights to share with us. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
It's hard to find a strong leader with the indices doing what they're doing, but we'll talk about what's happening in indices a little bit later. When you're looking at the momentum list, so those that are still shooting the lights out, having what you've got on screen here is like a hockey stick kind of movement, are you seeing much in the top 30 momentum list this week?
Yeah, no sort of overriding theme in there. Definitely a mixed bag in there. We are seeing some explosive moves for some of the sort of smaller names here. Even some of the medium-sized names, you're sort of seeing some big moves. But we're kind of seeing some big pullbacks as well, Chris, as well. So, so some of the names that have broken out once they're finished breaking out, some of them have been sort of chopping back here. So that's why, like, I think this number one here, this is a good example here, the AGC, which is number one. So momentum score of 64 there. It's a pretty big score. But, not too much to sort of see in there, really pretty, kind of might have tightened up here under the high there previously, then shot through there, but didn't really give too much, wouldn't say it's the greatest technical sort of setup here. But we now have a big move, big volume bars. So we just need to watch this one, see if it tightens up here. It's had a pretty large pullback already. So does need to tighten up. So we don't want to see the, loosers for losers and tighters for winners. So we want to see that tight pattern there. So something like this, just because it's had a big move and it's had a big volume there, we just put it on our radar. But we do need to see that tighten up. If it doesn't tighten up, then we don't want to be trading it. That's the reality there. LTP, sort of something similar. I guess one of those newer names. It's had a pretty cracking run here now. We want to basically, if you haven't already sort of, we're already trading this one here. That you want to be sort of watching this to tighten up here. So this is sort of one that I do like watching some of these newer names. IPOs, so it's obviously come out of the gates, gone sideways for a while, and maybe break a B wave. That's sort of something that you could look at there. Had a pretty decent move out of there. But yeah, I think now you've just got to watch this one here as well. I think number 3, pretty similar as well. Pretty big move, big volumes coming out of here. Again, you just got to sort of sit back and watch it, wait for this to tighten up here. And number 4 there. This one's sort of more interesting there because, we've had some pretty good volume here. It's interesting once these sort of, even if there's a smaller name here, you can kind of like argue, you can kind of just dismiss this chart straight away because it's too small, it's had a good run, but if you actually go and analyse this pretty closely, you'll see some pretty good volume popping up there, and it pulls back, and then you see the volume sort of come in again. We've seen under here, we saw pretty good volume up to this point, and then the whole thing just tightened up here, even though it's a smaller name, still got that classic sort of pattern, Chris. So strong volume into the drives, pulls back, volume lightens up, volume comes back in the next drive. Then you get that really tight 2 or 3 days, on its side here, like 1, 2, 3, no volume there. So no selling there under the high, and then pop, you go through a big volume there. So even though this is like a 1 cent stock there, still showing the characteristics for 1 cent, 10 cent, 30 cents, 70 cents, $1, $10, $20, just the same characteristics that you'd see in the strongest names there, sort of big volume pop, pull back, big volume drive again, pull back, tighten up under the high, pop through. And we saw volume come in again. And then again, if we thought this has gone too far here, you see 3 or 4 days in there, no selling again. So all of a sudden I think, oh shit, no one's selling the stock still. And then bang, the stock goes up again. Has another 3 days down here. Look at this, 1, 2, 3, but no selling. So I know it's easy to sort of look at this after the hindsight there, but this keeps happening over and over again. So whether it's the bigger names or liquid names or bigger stocks there, we are seeing a similar setup. So that's what you're looking for. You're looking for that volume that sort of jumps out. That's why I think volume is really important. That's sort of, you know, get rid of most of your indicators. Just look at the price and volume. And I think you'll have 98% of what you need in the market. And then maybe we would use a 10 or 20 day moving average just to, 50 maybe, to see how strong the market is, see how strong the stock is, and maybe a place to put our trailing stop in there, So, but yeah, it's had a pretty strong move there. So look, now it's gone through a bit of a pause there, maybe a little bit of volume in there. But you want to see this whole thing now tighten up here again. So it may have already finished doing what it's doing, but that's had pretty big volume all the way through here. Not much selling at all. Now you get a bit of selling here, but it's, for me, this one goes on the radar there. Now just to sort of have a look out there, but probably need a bit of time to tighten up there. But that's a good looking chart there so far. It's obviously a small name, but it could set up again, because that's the one that, we shouldn't just dismiss that as done now, because we know that oftentimes those ones that sort of come back in, they start off looking like that. So, yeah.
Just before you move on that one, there's a super rare setup in there just at the end of March and April that you were hovering on. So, yeah, you have the drive, you have the pullback, and those low volume days that you're seeing there. So those on the volume bars, those 4 lower volume bars.
Yeah.
Look to the left before where it broke out and retouched that high. That day right there, yeah, exactly. 25th of March. If we count to the right-hand side, 1, 2, the number of days, 1, 2, 3, 4, 5, 6. There were 6 whole trading days where the range was inside that 25th of March date. Didn't go above it, didn't go below it.
Yeah.
And statistically, that is a super, super rare setup. So if anyone watching has done the statistics on it, I'd love them to share it with us. But that one there is a really rare setup. If that is found in this VCP or a cup and handle or something like that, especially with that volume profile you described, that's super, super potent and very rare. But
well, that's the David Ryan setup there. That he loves like just seeing the stronger names. Obviously, sometimes they run a bit longer, a bit further here. Then the whole thing, I mean, if you look at Nvidia's done this, but at $500.
Yeah, but it's actually so that you have one day where the whole range isn't surpassed for. It's rare to get 4 days, but when you get towards 6 and 7, that's really, really low probability of those 6 or 7 days not breaching 1 day's full range. And because often you'll have, like you've highlighted, they break out, they gap up, and then they end up shooting up a little bit higher, and you buy it and fade. So
so I think this whole thing here was just the whole thing just tightened up here under this under this level here as well. So nice and tight.
If you zoom in there, there's probably 4 or 5 days on that one right there, but you find
the whole thing's just the whole thing just tightens there as well. So that's a good setup there.
But we've digressed. We'll get back to the list. DXB.
Yeah, DXB was another one there. It's sort of it's interesting here. Obviously, it's there was a kind of BCP in here, and then it's obviously built again, tightened up again, and then broken through. So, been a strong name there. So, to me, it's, once you start to see the strong names develop there, you're really looking for that little B wave break there. I've noticed actually, even going through some of Minervini's trades there, he'll sort of revisit the stronger names. I'll come back, and then he'll only look to re-establish position if he little breaks, a little swing high. That's often he'll come back in there. So that's the first time they'll come back into those stronger names. They just try and buy the 50-day. They'll wait for it to hold there and stabilize there, and then maybe look to it to break above a little high there. So we just got to keep seeing this sort of pivot here as well. Tighten up in here as well. So it's had a little pause in there, break a B wave, had a little pause in there. Can break a little B wave, have a little pause in there, break in that zone there. So just you're sort of waiting for those sort of consolidations to sort of keep going here. This does the opposite here. Actually, this gets a bit looser, Chris, rather than tighter. So that might have actually had you a little bit nervous in here. And the volume was actually, there was a reasonable sort of, 3 sort of heavier down days in there and less volume there. So you might have been nervous about this one here because it's probably not the classic sort of setup. But it still has sort of kicked on here, and on new high there. But I thought that was sort of interesting there. DH2, we've had a big jump here, but we've had big volume back here. So that's not loose. So that is loose, I should say. It's not tight there, the price action there. So that's an avoid for me. Just want to sort of see that kind of price action there. But this is interesting here. Obviously, I've had the stock's been running. Had a bit of a pullback, broke the 50-day there. But if you look through that whole period there, Chris, as well, there wasn't, pretty light through here. The big days were actually was some of the up days. Then it continued down, pretty light volume. Saw a few days, the volume came back in again. Saw a little bit of volume at the low, but that was the day of the low. Then it sort of started to build here. And I think the first day back through, this is sort of like, again, kind of revisiting those old names that have showed relative strength there. If they blast through the B wave there, that would have been a good signal there, because it's sort of taken out a last little swing high, and we've got big volume. That would have been big volume for the period as well. So that's why sometimes I've been sort of with all these sort of relative strength names, once they sort of tightened up and broken and then run and then go through a bit of a pause, if they sort of break below the 50 days, sometimes I thought, that's it's all over. So I've sort of stopped looking at them. But in hindsight now, I keep seeing them. They'll sort of break the 50 or maybe come back and retest the 50 and then start to build again. And there'll be sometimes there's a pivot day in there where we see the little B wave get broken and the volume be pretty strong, and then they continue on again. This is sort of like, with this little square off here is sort of can be quite powerful. I've seen quite a strong, a lot of these sort of leaders make this little setup here, just a little shakeout, and then turn up here. But you really want to see that bigger day volume there, and you also want to see that B wave break as well. Those are the two things you must see, I think, before because they can just keep winding lower. So you want to see them break above here and a bit of volume come in. So in terms of revisiting, so that's a good lesson for me personally is to sort of keep revisiting some of those stronger names that have shown strength there, because they often do re-emerge a bit later. EQN is sort of one just to keep an eye on here. It's just gone back to retest the high here, but some pretty good volume through here, Chris, as well. So we saw good volume on the drive here into the high. Bit of a large pullback, probably a bit too large, but it has come back up to the high here. So kept this on my radar there, because so far, not too much volume here so far. Maybe this can set up a little handle here. We can stay tight here for maybe the next 2 or 3 weeks. Doesn't move too much. It's sort of one to put on the radar, but yeah, pretty early there. I've just sort of put it on watch there for a couple of possible cup and handle, but it's got a long way to go there for that. But it's just the early setup looks like it should do. GDC, again, we're sort of talking about, this is probably not the best example here, but see how we've, this stock showed relative strength. Did come back to the 50, just pierced it, went back up to the high, and after this day here, they look 1, 2, 3 days here. Again, just no selling here, right under the high, just congesting under the high again. Just keep seeing this setup here. It's just, classic. Yeah. It's hard to, obviously news came out here. Oftentimes you'd like to see a breakthrough here and then follow it, but it would have been hard to follow this and there. But no doubt that setup there is just, just keeps popping up on those stronger names all the time here. Integrated research is pretty interesting here. Watching this one pretty closely at the moment, Chris. Just we've had that really impulsive name here, a bit of an upgrade for the stock. Everyone's up, moved up everyone's up their guidance. And now we've had a bit of a cool off here as well. So I thought it might have been sort of congested there, but I thought it was a little young. Thought might need to use up a bit more time here. So still sort of holding here tight here. So this, this is the one thing sort of that has really started to sink in for me personally is that in the trading sphere, there's a red light and a green light environment. And there's, and all the greats say exactly the same thing. When the going's good, they put the foot down. When the market sort of, is negative, they're taking the foot off. So either sit out power or, less size, don't use any margin, but really sort of being very conservative and not trading much when the market's a little negative there. So we're seeing the Dow's broken below the 50-day moving average. The S&P 500, for those who watch that, we've had 4 distribution days here, Chris, in the last week and a half here. That's a little negative as well. XJO's broken below the 50-day moving average, even though it's gone above. But so just a bit of a choppy environment, a bit of a weak environment, a couple of those markets there. Seeing some distribution there, they're all negative signs, the market. And we know that some of the names, some of the little patterns, VCPs and stuff, some of them breaking through, some of them failing here. So we're seeing a few more failures creep in. So market has gone from being in a bit of a green light environment to sort of going a bit amber and now sort of turning a bit red here. So the environment's telling us to take the foot off the gas here and to play smaller, play safer, or or sit on the sidelines. Where this is the point where I made a point recently to sort of go back and listen to those Minervini, Calamaggi, just those best guys, and they all talk about putting the foot down when it's hot, and then basically sitting out when it's not. And it sounds simple, but it's not. If you love trading as much as I do, even part of labels to talk about, he's addicted to trading. He wants to trade all the time, but you do need to sort of take the foot off, take margin away. Have some rules there around being lighter and stuff when it's like this, or at least have some sort of hedge in place as well. So, but it's just a really interesting time there. So what we're looking for right now, the market's starting to week off. We want to look for those names that are holding up the best. This could be the most important. This is when all the gun traders do the most amount of work for it. This is, you think, the market turns down, they will take a holiday. They don't. This is actually when they do it. So they're not trading now. They're basically showing sit-out power. They've reduced the trading size, or they've tightened up all the stops there. So this is the point when the market will turn down there. They'll be, everything they've run on the upside. They've probably sold some into heat. They've moved their stops up based on whether they're tracking the 10 or the 20-day moving average. As they cross through the bang, 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 all of a sudden they go from maybe being 80, 90% invested to being maybe 40, 50% invested. Within a week, they can be fully in cash. So best traders there will basically sort of will change their positioning if the market sort of shows that hand there. So, but now comes the most important part is to sort of, we know they're looking at, that video that I did for the ATAA. That, it's imperative. That sort of shows you there that you're looking for the strongest, when the market has those pullbacks, you're looking for the strongest names to hold up. The market's going to tell you who the strongest are here, and those are the ones that are going to come out strongest there. So we can see here, this IRI is holding up really well. So it's, it's nice and tight. So they've got the tight price action there. So showing some real strength there at the moment. Just the other name there, which has been pretty impressive so far, is PEXA. PEXA's had a pretty strong rally there. Look at that. The market's had a pretty deep pullback. This thing's just held super tight here. It just hasn't sold off at all. So showing some sort of strength there. So it still might go sideways for a bit longer here, but maybe it'll edge back a bit further here. But it's showing relative strength there. So those are the sort of names we've got to be looking right now, doing our homework, recognizing, so I reckon we need to be looking at your list even more closely than ever, Chris, seeing who's holding up the best there.
Well, that's a good point. I was going to ask you about that into the Launchpad, but I'm glad you expressed the red light, green light scenarios at the market. This is something that you said right at the start. I said, what's happening in the momentum list? You said, there's not much of a theme. I'm not seeing anything in it. And that's something we were talking about throughout the week is, hang on, when the market's not showing a strong theme, it can be quite choppy. And we haven't seen a strong theme come out of either the momentum or the Launchpad in the last couple of weeks. And that's following when you'd said, we're seeing a lot of small caps in here, which is a precursor to the market getting hit.
Yep.
That's what we've noticed in the patterns of looking at these reports. And similarly to that, as the market's been coming off, we haven't had strong conviction in any one theme. You've said a lot of the breakouts that have been occurring have been failing. And in these themes that you're trying to look for, when we look at the numbers, we break down the numbers to see exactly how many industry sectors and themes are represented in the top 200 momentum and Launchpad stocks for us to get a gauge of where the market's dry, where strong forces are. And when we see things like financials, consumer discretionary, and the actual sectors showing up in the top 10, that's a warning bell that there's not a good market. And that sort of fits in with what you're saying. It's kind of moved from amber to red. So when you're looking at these charts, these momentum ones, as we're sort of finishing off the momentum list, are you excited that there might be a trade here, or you're more so thinking, I want to add this to the list and I'll see how this will play out in the next days and weeks?
Yeah, so I just sort of, in my head, smart, that sensible Gary's basically saying, trade light here, maybe a couple of little shorts on, stick to the strongest names there, but go the trade light. Should be, probably 50% cash, just sitting 50% cash at least here for the next few weeks until the names emerge. Because then the next leadership group should be coming here. We don't want to be caught in rubbish. We want to basically be, getting those strongest names, positioning there at the right time there. So that's sort of the, that's the big thing for me is, you see that in the past, we saw it October 22, we saw it December 22, March 23, October 23. Well, those big dips at the market pulled back in there. All the stocks that were showing the strength in those periods, they all went on and had the biggest moves. So that's telling us here, we just need to wait for the market to show us handy. So, we know that, I know personally 12 weeks of the 52 is where I make most of my gains. So, the other 40 weeks, I just got to try not to lose too much money. So you got to wait for those sort of setups here. So we got to wait for that next sort of, golden period here. So market's pulling back here at the moment. It's going to make it a bit of a key level, our market, but still might be a bit churny here. I still think we're, high inflation environments like the 40s and the 70s, lots of volatility, but didn't really go that far. Big range bound markets, so big movement up and down, range bound. Then we're seeing stuff like, REA is up near the high, demand's down near the low. You got Qantas and Buy Center went up near the high, then in corporate travel's down near the low. So you're getting, market's disengaging. It's like, the sort of stocks in the same sector are doing wacky, wild things, but they're going up and down, up and down. It's just erratic. It makes it hard to trade because a lot of it doesn't seem sensible. You see stocks that are trading on PEs like maybe 20-30% above where they ever should be, and their earnings outlook is probably worse than it's ever has been, yet they're still trading there. Other stocks have actually got some pretty good earnings, some growth there, and they're trading down near the lows, and you go, gee, this thing's like trading half its average PE. What's going on here? Is something broken? It's just, you're just seeing those erratic behaviors, but that is common. High inflation markets, really range bound moves. So but as a trader there, you're just going to trade what's in front of us there. So don't, it sounds weird here, but don't get sensible in another sensible market, because that's going to probably going to go against you. Just look at what's, like follow the price here. Price is never wrong, so that's the one thing that won't let you down here. So, but I think the other thing too is that, like we're seeing here, some of these, this BUL is a great example there. We saw a nice BCP in here, Chris. Whole thing tightened up, and it did break pretty hard here and have a pretty big move back and then retest there. But what we're seeing with a lot of these patterns is that, like, we're seeing a few more fail here. But even the ones that don't fail and do have a run, when they're done, they're getting cooked as well. I mean, that's gone from like, 550 here down to 440 in 1, 2, 3, 4, 5, 6 sessions. So I think you need to be, one, selling some in the heat like all the pros do, but also make sure, make sure you're following there. I mean, that should have been like probably your 10-day moving average should have been, this one's flying. So that, Kalamagi and all the pros, they should, look at either 10 or 20-day moving average. They should be tightening up there. But I think you're I don't think you should be up, I know some people say, I don't want to use stops and stuff. Yeah, that's fair enough. But I think this is environment there. If you're not using stops there, like, you've got to be alert to the market. You got to be, because they were swinging back there. Even that GHY, that was a beautiful VCP. And here, look, it's nice and tight, broke out, great move. But then pull that whack.
Gave it all back in the day.
So if you're not running a stop here, then just say you didn't put a stop on it, and then you're out that day. So yeah, this is what I thought. I think you actually sort of do need, even see here that hug to the 10, or even if you gave yourself some room 20 there, I think you're going to be using stops in this environment here. If you're not, at least sort of be watching it a lot more closer than you normally do, because I think some of the moves that are running there, they are sort of pulling back here. That Newix is still pretty firm here. It did break the 10, so this has been a pretty aggressive move out of this cup and handle. That stayed pretty tight in here. Now they started to accelerate off the 10, came back to the 10, has just broken the 10 there. So that's a little negative sign there for that stock there after having a pretty good run here. So me personally, if I'd been trading the stock here, I'd be trying to sell some in the heat. I probably would have been using the 10 just because of the strength of that move. That's just something that a couple of the pros talk about. ERD is one that I liked there last week, but very thin, hard to trade there. So I left that one alone. There's not much liquidity there. Thought CBE was pretty interesting, Chris. Couple of VCPs in here. Has sort of broken out to a new high there. Little patchy volume-wise, a bit small, so not my sort of cup of tea. I don't really like trading these sort of 10-cent stocks. But interesting sort of stock there. Bit of volume in this drive, a little bit of volume in there, not super great volume. So, but it is in that sort of copper and gold area, which is a strong area currently. So, has sort of broken out this little here, just not the great volumes there, not showing super liquidity there, but not the worst looking chart there. That's our sort of quarterly there, bit long on the quarterly list. I'll make it quick for the weeklies.
Well, the weekly's been the Launchpad, so those that have had the best improvement this week. And quite often, well, this is where you've been noticing the strong themes and the best companies start off in the Launchpad, and then sometimes 2 to 4 weeks later, they find their way over to the momentum leaders that you've just covered.
Yeah.
So what's standing out in this week's Launchpad for you?
There's a few that sort of some of the bigger names that did stand out. Like probably Novo has been trading pretty well, actually showing some relative strength. The volume's been pretty steady. It's all been sort of squared off here. So that's pretty interesting. I think Premium as well has actually held up pretty well as well, Chris. So Premium is obviously, in that sort of net wealth sort of hub, been talked about as a takeover M&A target for a long time here, but it's holding up pretty tight here. There's a nice sort of sideways sort of congestion there. So yeah, that stock has held up pretty well in a negative market. NWH is another one that's actually showed real strength here. This is pretty some pretty good metrics for this NW holding. So again, that's showed pretty strong price action there in a pretty negative tape there. So the sort of stocks that are actually doing pretty well. Catapult was one actually that did have a VCP in here. I did try to buy this, Chris. Actually, I sort of had a bit on, and I tried to buy this one. It got away from me a little bit. I didn't chase it, unfortunately. But all that nice, the whole thing sort of like this kind of thing just sat on top of this previous move here. It's a nice little rectangle, a little, just building on the last high there. And then once it broke through, it's had a bit of a run, but then the whole thing's tightened up again here. Pull back in here, pull back again. Oh, look at that tightness in there. So which I'd seen this one a little bit earlier. But yeah, nice move there, and popped up a couple of all that little inside day there, no volume. Was coming into earnings. That was a bit of a little bit of a yeah, maybe a little negative there, but it did. I think it sort of did pop up into the earnings. So, sometimes, is that enough of a, you get like a 10 or 15% move into earnings? Is that enough buffer? So yeah. But yeah, it did feel like the way it was trading there, that was going to be a pretty good result there. If you follow Catapult, you can see that, for me, that's that company's gross revenue line pretty consistently. It's just whether just the P&L, where the earnings are sort of going to come through there. So it's starting to get that stage there now where they're not trying to grow the workforce. They've got everything in place now. Now starting to see the earnings kick on there. So it's quite interesting at this one. Sort of, I thought this might just sort of run and pop here, but I did listen to the CEO yesterday, and he was talking about not putting any more headcount on. Just think, we're sort of building quite nicely there. Just so I know, said all the right things there, which I know sometimes they just say that, but it is a company that's done it. That is time there, and you've seen there in the past there that companies that do transition from the revenue sort of SaaS line into the earnings sort of line there can be a bit of a changer for the stock there. So yeah, I definitely would be. I looked at this, I thought, maybe breaks out of here, maybe 180, 190, but after sort of seeing, listening to looking at the reports, that sort of could be.
Before you move on from that one, actually, before the breakout. So if you look at the middle of May, there's that large green bar, that one there to the left, and then you've got 6 consecutive days that are within range of that bar. Breaks out. And then the middle of March, about the 11th of March, there's a similar setup there. So to the left before the last breakout.
I don't know why I didn't try this one, because I was on my watch list for BCP for a long time. Even one of the viewers there actually, who I did chat to a little bit, he sent me his list is on the list there, and I was watching it. I had it on my BCP as well, list there, showing relative strength, holding up nicely. I was just doing other things there, a bit of a busy day. But no, it's good setup there. I think the thing just moved really quickly on the day that I was, obviously this day here, I was looking at it. It just came out of the gates, and did get a couple of inside days there, but I was just feeling a little cautious about the whole market there. But this one's nothing wrong with it at all. Looks perfect, looks good setup there. In the end, though, the announcement's actually been a lot better than I thought it would be. So it's I think brokers will be upgrading based on what they heard as well, interesting. But that was
Catapult.
So some of the other names in there, some smaller names in there. I think ARX is one of the small ones in there. It's been in a downtrend for a while, but it has broken above maybe a minor swing high, which is possible change of character, but very early here, so maybe just one to keep an eye on there. I think IMR. This one's pretty interesting to me because it's a large sideways consolidation there, and we saw some pretty good volume on this drive here. It's a pretty good volume over there. So if you we zoom out there, good volume there, sort of driven up into that high. And now we've sort of been consolidating ever since there. And it's held pretty tight there the whole time. So hasn't really shown too much. It's been slow going here, but you've started to see a bit of volume come back in the last few days there, around there. It's sort of, not that it's a look for the false break or anything like that, but I'd love to see these, look at some of those VCPs on the sort of smaller names, they tighten up over a long period of time. They can come out of here. This is definitely one to go and have a closer look at, and do some sort of homework on there as well. I thought that was pretty interesting name there. Medical systems there. So that's definitely one that could
wind
do
up
more.
The
other one I thought was interesting was Zimplats there, which is very, very look how tight the price action is there. The whole thing is really, really tightened up here. And the volume's been pretty elevated as well. I thought it was pretty interesting volume there. The only thing I didn't like was, I think this this day in here, they had they had their half yearly, Chris, as well. It was pretty average. So the really sort of big drop off in production and revenue, and just not a really, hence why it's pretty aggressive selling. So it's sort of sold off on pretty bad news. So I prefer to be seeing some good news. The stock here. So I know it's a bit building here, but I just sort of like, unless something dramatically changes there. So I love the price action, the tightening now. I was getting excited by the volume, but when I read the report, had me less excited there. Just, fundamentals don't look that awesome at the moment. So the other one that actually is showing some relative strength there, Chris, is SIG Sigma, which is Chemist Warehouse, and which have been wrapped up into here. But we've had that trade of the high, come back, gone back to retest the high here. Well, we're just tightening up under the high. Yeah, this is interesting price action there, showing relative strength. Is a strong name there. Might just need to use a bit more time here, but not showing too much weakness at all. So that does look okay there to me. And BRG was the rebel as well. I thought that's just pretty interesting as well, actually holding up pretty well, showing some relative strength as well in a negative tape. Looking pretty strong there. Domain holding was sort of a bit of a surprise to me. I've been watching this because that's Domain's been going down for pretty much almost the last year. So whereas REA has been going up for the whole last year. So very similar business. I know say, okay, REA, maybe the margin's a little bit better than Domain, so maybe slightly better business, but they're identical. Most real estate, so both these, they should really be following a similar path there. The one thing I don't like about Domain is that, in my experience, when I've seen it go to a new high, let's see how this is the old high there, just broke that old high like a little false break. In my experience, they often will come back and touch the previous swing low, which is slightly lower here. That's sort of told me just to keep an eye on this, like 244. So it hasn't sort of come down here. Like the volume's starting to trade up here, so maybe it won't come down here. But I would love to see like a false break here. I think we talked about HM Milk doing this recently. See how it, came back and retested that low there. And then we know it's going to go back and retest the high. Now, it sounds crazy when you see that, but I've seen this over and over again. This big false break with the big ranges there, come back and retested that there. But yeah, so the Domain is pretty interesting now. I'm sort of holding off there. I think it makes no sense as to why REA is so high and Domain's so low here, but it might just need a bit further to go. But this is definitely one here. If it went below here, marginally lower, I think it could be a pretty good opportunity there. But we'll see how it goes there. But it is holding up here so far. So pretty interesting. But yeah, we'll see there. But I think this is a time to be. Yeah, it just feels like a little bit of a red light environment we're sort of entering here. If you look, I don't know if people know what distribution day is.
That's probably worth showing us. Yeah,
the distribution day is just where I think the market's off. I think IBD. I think they're sort of they refer to it as like I think it's down by 0.2% or something like that, and the volume's larger than the previous day. That's a distribution day. So see this first day down here. So the volume was higher than the previous day.
The next day was range, but it was down.
It was down here. And the next day we saw was down as well. And that was a big range down. The volume was up there. So we had 2 distribution days in there. Then we bounced there. Lighter volume there. And then one day down, volumes increases again. And then down last night, volume increased again as well. And the other thing we've just seen there is that we've now just closed below the previous swing high. So we do have a bit of a false break there. And I've been talking about the 60-year cycle, how this is the market. We've been following the 60-year cycles closer than any other sort of cycle I've noticed there. And that 60-year expanded to a new high, and then actually expanded to a new low. So I don't know if it's going to do that or not, but it's the one we've been following here. So it's just eerily sort of similar to it here. So we've got 4 distribution days. IBD sort of suggests that if you get that 4 to 5 distribution days at a high there, that's normally a bit of a precursor to a pullback as well. So we might just see a little bit weaker. So the election years, you don't see big pullbacks there. So I think, roughly like an 8% correction is pretty large in these years. Yeah, that was the reason why I took off my 8% short off the last high for the NASDAQ and S&P. Is that sort of in the past there? That's been about the extent of the moves in election years. So look, it just might be a bit of a choppy period ahead here, but we do have a few distribution days. So it's just trying to be a little bit careful here. It's not time to be sort of betting a margin or betting big here. I think it's probably time to be sort of being a bit lighter. Time to be doing some homework and looking for those names here. This is all the work we're going to do here in the next week or two. It's going to set us up for coming out of the next load here when it arrives there. So we want to be watching the strongest names there because they're the ones that are really going to come out guns blazing.
Well, just on that, before we wrap, I want to ask you, you're talking about the work that you're doing. You're saying the pros, the best traders, this is when they get heavy into their homework. They've pulled back to cash or they've lightened their load. The market's pulling back. They're trying to find the relative strength to be the next leaders that they will power on through and jump on the back of. And as you've said before, sometimes Minervini will wait weeks. People want more insight on that. There's a link to your video, your presentation below. But the question for you is, the watch list that you're looking at now, throughout these reports, and definitely within today, you've mentioned adding them to your list. You've talked, if I break it into two broad lists. One, you've got the momentum leaders that are breaking out and hitting new highs right now, but maybe looking for a cool off. And then you've got the other ones that you were talking about, particularly some of the larger caps, where they're edging out a bottom and they're showing some sort of volume formation, basing formation, 0, 1, 2, 3, B&P, or relative strength, or some sort of possibly false break setup. The question is, in this environment right now, would you be spending more time on looking at the momentum list and those that have already broken out and having a minor pullback, or those that are sort of trough building? How would you allocate your time between those two lists?
Yeah, no, good question there. Probably start to look at some of the new names as well. So, so definitely kind of revisit some of the IPOs the last couple of years. I do have like 22, 23, 24. Just watching some of those new names in there. So there was some new. There should always be some new companies starting to emerge, Chris, out of after each pullback in the market. And they're just looking at who holds up the best as well. It was sort of saying there, but even I've noticed, like looking through the October 22, December 22, March 23, those sort of periods there, stocks that held up the best there. Those are the ones that sort of came out there. Now, some of those didn't have big moves. So some of them might have only rallied, say, 20, 30%. Okay, it's not big, but still pretty good out of that congestion. So you might have only got a 20, 30% rally out of that sort of low. And then they pull back with the rest of the market. But then those ones that held up the best on the next pullback, so I think October through to December 22, some of them pulled back. But the ones that was showing strength at October, their next drive out of December was, some of those were massive as well. So that's what I mean. You got to look for the strong names here. They're re-emerging as well. So they, sometimes they might only give a 20, 30% move because they're held up they're pretty high. And then after they move the 20, 30%, you've got to have some sort of trailing stop there, like the pros, trade some in a heat, run a 10 or 20 day moving average, build to there. But then they might go through a little bit of a contraction period as well. But those names are going to stay on your list, because the one thing I've learned from going back and looking at 22, 23 is that the early leaders there, I mean, we saw like gold was actually showing older strength in October 22. And that's continued to run and hold up. And there's been 2 or 3 big rallies in there. So the names that sort of hold up here, they might have a rally here and pull back again, and they might have a rally in the year. So it might be, so I think the election year normally get some weakness into the mid-year, and you sort of think roughly sort of either like a May or sort of like a July sort of low, and then you get a run up there. I think you have another, I think October might be the, so something like a July and October are oftentimes sort of lows in this year, but normally this is a year that finishes pretty strong. So election years have got a habit of finishing very strong at the end of the year. So kind of looking ahead there, what's going to run up here. So the strongest names now might have two runs, might have a run up after this market pullback. We could get a bounce there, hopefully 20-30%. Then they might congest again, and they might set up again for later on. So the names that sort of show some strength here over the next few weeks there, those could be the names that we'll be trading that might make the biggest moves for the rest of the year here. So that's why it's pretty important to do that work. That's why the pros do that work. It's, it's only in hindsight now that we've been doing this for like 3 years, Chris, and then going back, and it's because we're reviewing. And this is, again, another big element of not just that learning your own trading there, but actually going back in past and looking at seeing what happened in the past there. We can see here now. Because we've been doing this for 3 years, Chris, we're now getting intuitive as to when a sector lights up, we know that sector could run pretty hot. When we're seeing all those names on the list, when we're seeing all the small names, when we see no sort of real sort of theme in there, we just see some of the small names lighting up, we know we're near the end. So we just keep seeing the same things because we're sort of really, building this sort of, getting intuitive these sort of names and stuff there. So it's actually sort of highlighting where we are in stage. And as you said, like you said to me earlier, now we'll start to see some of the bigger names will start to come back onto the weekly list there. We'll start to see some bigger name companies come on, because normally the big caps will start to emerge first, and then mids, and then the smalls with each correction, So we know we go through that evolution, we go through those stages of the market there. So just keep saying the same things over and over again. So, that's the thing about sort of trading, and particularly if you're reviewing, going back and doing all the homework and viewing what works there, you know what should be setting up. So yeah, it's just doing the homework there and being prepared for it. Yeah, it's just so important not to, so important to lose as little as possible when the market's not on. Yeah, it's an odd saying, but it's imperative there when you're not in the green light environment, is to really tighten down and, try and put in some policies or some process there to stop yourself from trading as much when the market's not in play. And then, when the market's sort of, it's emerging again, starting to show the right signs, coming out of the lows and stuff there, that's when you start to put it on there. So that's, just listen to, I listen to Mark Ritchie II, who's now working with Minervini, listen to Minervini, Kalamagi, Ryan, all those guys, they all talk about the same things there. And sometimes it doesn't sink in, but they all talk about sort of going to ground when it's negative, but then waiting for the green light environment to build, waiting for the right signals, waiting for everything to start working. And then once it's working, then they're on. That's when they're getting aggressive. So, so you got to know when to put the foot down and know when to take it off. So that's, putting the foot down when the market's choppy, erratic, moving averages are getting broken, stuff's not working. That's a no-no, and if you don't know that already, you'll know that over time here. I'm starting to learn that you got to really tighten up here. I tend to make I do make a few mistakes. I've made a little bit of psychoanalysis this week here. I sort of was looking for, because I've got my system so process orientated now, it's gotten so boring. I have been looking for a little bit of excitement on the side, which has caused me to do a bad trade once a week. But I've realized I'm just going to find some excitement somewhere else. So, but it's, but we've got to analyze ourselves. We've got to review ourselves, got to understand what's happening there. So, but it is, you've got to understand the climate we're trading in. So that's so important. Sort of, I'll just keep listening to those pros. Just, there's so many videos there. All the professionals there have been interviewed left, right, and center by everyone. Just go and listen to them. They all say the same things.
Well, we're happy with your interviews and what you're sharing with us, Garrett. So
I'll probably saying the same things over again as well. So, yeah.
But it works. And it's like you just said, with your pattern, with your trading, with your setups, you've got it so regimented through reflections, through looking back and refining your system, and then studying and looking back over your trades. You've got the system to the point where it's almost boring you, and your performance is improved. Your losses have dropped off significantly. So your metrics have improved, but the excitement has decreased. And that's sort of, like you were saying to me before, it's almost an indication that, and this wasn't about your own portfolio, I'm talking about others, is that it's actually a trading system that has got so robust and so refined that it's actually much easier to follow, but less exciting. And I don't know, maybe we take that into the next market dip and everyone else does their homework and polishes off their system so we all come out stronger. That's the way to do it.
I think this as well is probably just to get a bit more, is to be more patient with the market's not on like this, and then maybe, wait for that, do all the homework, see all the names set up strong, and then that's the time to sort of put the foot down later on. That's the time for me to get excited about that. So I think being able to, you can correctly put that in place there, Chris, and execute that. So really sort of stay patient through the bad times. Then when all the strongest names set up and all, and you're in all the strongest names, and then you're trading them with strength and with scale and size, and then you're running them quite long, and you're coming back in again, so all the, things we're sort of learning and stuff there, that'll be exciting if you can execute that, so, because that's what the pros are executing. So, so as we're trading here, we're learning this, so we're doing, each year I'm executing better, but I'm still not at still not the level of some of the other guys are at. So, which is exciting. If you're, if you've doubled your gains and, over a couple of years, and then you can still see there's so much room for improvement, and you're still a long way away from reaching that, the level of pros there, then that should be exciting as well to build towards. So it is sometimes it's having a bit of a thick skull. It takes a while to sort of permeate through it, so mine's a little thick sometimes. I've always had to work a little bit harder, a bit longer than some others for it to permeate, but I know that I'll get there in the end. So, but yeah, sort of you're starting to see those. And sometimes you're reading certain things, you're listening to it, seeing it, but then it takes to sort of see it over and over again sometimes for it to really sink in. So but it's exciting as well. So that's we're just as traders there, we just got to let's have fun along the journey, I guess, as they say.
Yeah, well, we're definitely having fun, and we've got a lot of homework and a lot of things to review over the weekend that you've given us. At that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned a whole lot of things. His Tuesday interviews or his Tuesday reports are a playlist on the right-hand side. Some of the setups he's mentioned also on the right, and his X or his Twitter handle over there on the left.